Welcome, everyone, to the Directed IRA podcast with Matt Sorensen and Mark Kohler. We're just delighted to be with you today, talking about our favorite topic, self-directed IRAs.
Delighted? Delighted? Speak for yourself. It's April 15th.
Yeah, but the IRS gave us some, what do we want to call it?
A punt.
Some mercy, a punt.
Yeah, they gave us some mercy. They're like, there's a new fifth down. You can punt. You know,
Yeah.
You can have 4 downs and then punt. Yeah, but there's still deadlines today. Payroll deposits, first quarter estimated tax deposits, all sort of state deadlines where they said IRS is doing whatever they want. In our state, we still want your extension or return. And that's a little, tip there, folks. If you haven't checked with your accountant on any state deadlines that you might be missing out, get there. But I don't know, April 15th, it's just in my blood. I just kind of get anxious.
Just, you're like, how many years in life are you of being an accountant, let's say, April 15th, your body's and your mind is on that rhythm of you're supposed to, you taught yourself to dread this day.
It's a biorhythm. Some might say it's that time of the year. And
time of the year.
And it's not a good.
Going to be grumpy. You're not going to want to talk to him much. Just
going to be edgy.
It's that time of the year.
Yep. I'm looking for any opioid in the medicine cabinet. I'm like, pop it. Let's go.
Yeah. Well, here's the good news on it. Also, too, your contributions, 2020 contributions for your IRA, Roth IRA, HSA, ESA, solo can SEP IRAs for those that are sole proprietors. That is not today, or April 15th, depending on when you're listening to this. That is May 17th for 2020 contributions. So there's some good news in all of this mayhem and confusion.
Yeah, and that's a good tip for some of you that may be new listeners. No matter where you're at on the income scale, 1%er, 99%er, no matter where you're at on
your
scales,
1%, then 99.
Yeah.
Okay.
Wherever you're at, whatever you're making, you can still contribute to a Roth IRA through the back door. We have a great little video on that and a prior podcast on the backdoor Roth. We also have a sweet maneuver on how to set up your educational savings account or educational IRA. They've been around for years. I love them more than the 529. And there's some nice little loopholes to get an account set up where you're the trustee, and then you can have grandpa and grandma make a contribution who might be in a lower tax bracket. So there's a lot of tips things to do before May 17th.
Yeah, and that's sometimes called a Coverdell or ESA. That's one and the same, but it's not a 529, as Mark said. It's not. That's a different one. We don't love that one because you can't self-direct it. You're stuck into whatever the state fund is you throw the money into. All right. Well, today we want to talk about those of you who are new to self-directing, or maybe you have an existing self-directed account, you got some other dollars you want to self-direct. How do we move that from where you're at already, whether you're at Fidelity or Vanguard or TD Ameritrade, whether it's an IRA or 401k or a Roth IRA? We want to talk about where you're sitting now and how you get over to the cool party to self-direct, to invest in what you want to invest into. So those are called rollovers and transfers in general. We're going to break it down today.
Well, and I thought we were going to talk about the immigration crisis on the border of Arizona and Texas, but we're not going to go there today, right?
I know zero information about that. That would be...
It's bad. I'll just say that. Now, I will say this, though, on the immigration note. I was just going to pull up some of the criteria, but we ought to do a show just on this. A qualifying non-resident alien can have an IRA. So as you're thinking about some of these topics of immigration and retirement accounts, 2 wonderful topics people cover at a dinner party.
I love how you tied those together. I love that.
Well,
you're a pro.
Thanks. I weave a tapestry here on the podcast. So if any of you know an immigrant that just ran across the border, you might be able to say, hey, you can have an IRA. That's probably the first thing they're looking for. Not water, not food, shelter. They're like, I I jumped across the border. I swam the Rio Grande because I want a Roth IRA.
I want an IRA, and we get it. We get it. That, that's one of the great inventions of America that, people come here for. Okay. Well, all joking aside, and for those that we offended, or I should say Mark offended, thank you
Anybody?
for not turning us off yet.
Yes.
We have something, important to say about your retirement account.
That's right. And no matter what side of the aisle you're on, the border is a concern.
Just going to keep digging, huh?
I was digging myself out, I guess. I didn't think I was that dangerous of a comment, but you're making me sound like I
I don't know.
Okay. All right. Now, I want to start this topic off with an important point. Just yesterday, I called my partner, Matt Sorensen, and I said, Matt, my Roth IRA and directed IRA is all jacked up. I thought I made a contribution last year. Did I do the conversion already? I've got all the steps messed up. And you'd go, Mark, he said, you should know this. You are the most high maintenance client we have. And I'm the CFO of the company, but I'm not in the operations. And that's where really Matt and Aaron do such a great job of just making sure our team at Directed IRA is on the phone. You get an actual person if you call. Now, and you don't have to use our company on this podcast. We're just going to tell you how we do it to make it easy for you. But I'm going to say, even yours truly, Mark Kohler, I've been learning the proper steps to make it easy. And it can be a little tricky. So coming from the most high maintenance client at Directed IRA, because I don't dip my toe in the operations side of the business every day.
Yeah.
I feel your pain, people.
Yeah. Lest you think that there was errors made at Directed IRA, let's just say they were self-inflicted wounds, from what I understand, of someone putting the wrong year on something when making a contribution.
Shut up. So, you know what? Did you need to say that? Did you need to say that?
I did. I mean, I just had to defend the integrity of everyone here.
It's not Directed IRA's fault. I will.
Yeah, I wanted to make sure everyone was confident in this, and it could happen to anyone. It could happen to anyone.
Yeah.
Okay.
So, all right.
Let me highlight a roadmap of how maybe we should hit this.
Yes, and I've got a step one that I really like that I did with the client just last week. But you give the roadmap, and then I'm hoping my step one is your step one. Let's see how it goes.
All right. Okay. Me too. All right.
Cross your fingers.
Okay. Let's walk through first. We're going to go over those of you with a 401k.
Okay, that's not my step one. You've already screwed it up.
Okay. Well, I want to. Okay. Well, you come back to your step one.
Maybe, all right. Fine.
Maybe you screwed it up. All right. Okay.
Okay. Let me say step one.
Yeah. This is the problem of having a 50-50 partnership.
Yeah.
There's a lot of give and take.
Matt, you're going to love step one.
You have to assert yourself.
See, you already skipped step one. So let me just give you my step one.
Okay.
I have so many clients call and go, I don't even know what I have.
Ooh. Okay.
So I say, fair. So last week I told a client, I said,
I will concede.
You will concede to that? And so I told this, I told this wonderful client up in Eureka, California, I said, hey, do a little audit. Look for any statement you have from any old brokerage, from your financial advisor, anything that's come in the mail in the last 2 or 3 months that you all know, you throw it in a drawer. It's like gibberish. It's a foreign language. And I said, create a little spreadsheet. And I want you to put down any identifying terms on those statements. Do you see the word IRA? Do you see the word 401k? Write down account numbers, create little columns. Yeah. And this little spreadsheet is going to help us figure out what to do next. So I think a lot of people just need to figure out. And she was, I have this little IRA I didn't even know about. People find things when they do that.
Yeah. One thing we like to do at Directed IRA is just send us your statement. We will interpret what you have. Sometimes you have two things. Sometimes people have a 401k of traditional dollars and Roth dollars, but it doesn't say that on your statement. It says pre-tax and post-tax, and it's confusing. So we will help with that. We also want that statement anyways, because it goes with our transfer or direct rollover forms. So we will include that anyways, and it makes it easier for us to just help get the form done for you. So you can send that to Directed IRA if you're opening an account here. use that to help you know what account to open. And then we'll use that statement too to get your transfer or rollover of funds over.
And I would recommend this first step, Matt, is create a Google Sheet. Create a Google Sheet that you can share with people in your trusted group. Could be your spouse, your mom, your dad, a child, and even your tax lawyer. Because on the law firm side, we may be meeting with you while you're doing some of this work at Directed IRA. And the lawyer's going to say, what do you got? And you're like, oh, I did a Google Sheet with the customer service people over at Directed IRA. Let me tell you what I've got. And then they share the Google Sheet. We can build a picture diagram. We can determine what should be in an LLC, what needs to be in your trust, are your beneficiaries accurate? So I think this audit is really helpful before you try to transfer. Would you say, would you, fair? Okay.
Absolutely. Yeah.
All right.
And you should
that was my step one.
Anyways. You should be tracking that anyways.
So, you should, but that wasn't that bad. Step one.
I like step one.
Okay.
Step one, that was a good step one.
Okay. Step two then.
Okay. Let me give the roadmap though. I want to give the whole roadmap.
Okay.
Come back here. I'll do it fast. Because I want to make sure you understand we're going to hit what you may be situation you may be in. Okay.
Where are we going to go before we hit the road?
So let's say you have an old employer retirement account, 401k, 403b, any other retirement account you had in a prior employer. Let's say you have a retirement account, 401k, whatever it may be, at an existing employer. Can I touch that money and move it to self-directing? What if I just have a Roth IRA or traditional IRA, SEP IRA? How can I roll that over or transfer to self-direct? So we'll go through those, and there's different account types, even HSAs, ESAs, and all those inherited accounts. We'll go through those. Those are luckily a little simpler. But we're going to start with the 401ks, prior employer, existing employer, and then we'll go through the different IRA, HSA, ESA account types.
Oh, this is classic. Okay. Now, Matt, our producer is going to let us know if we can play at least the audio of this without having problems. This is on YouTube. So I'm just going to go for it. We are going to watch the vacation roadmap scene with Chevy Chase. It's 60 seconds long. Now, this is classic for those of you who've seen Vacation, because he literally, I didn't even know this until I just pulled it up. They've got an Atari computer right there in front of this crappy TV and an Apple IIe. If any of you remember that from the 80s, we had an Apple IIe, and he gets up and says, here's where the family truckster's going. This was the roadmap, you know? So this clip, I'm going to highly recommend it for everybody. As Matt talks about the roadmap, the first thing I think about is Chevy Chase, the family Griswold trip to Wally World, and the family truckster. I mean, I didn't even look at my, that just came from memory. That was not even, I was not reading Wikipedia or anything.
Okay.
That's how important that scene is to everybody. Okay. All right. So the producer said we couldn't show it here because of copyright issues, but Matt, it's a classic, right? It
is a classic. And you know, they get to their destination of Wally World, it's kind of a buzzkill. Yeah. That wasn't the best roadmap, you know.
Yep. Trivia. You ready for some trivia? Who's the security guard at Wally World? Who played the security guard?
Ooh, I don't know. Who is it?
John Candy.
Oh, okay.
Remember? And he had to do the roller coaster ride with them.
Huh.
And
I gotta watch that. I haven't seen that again. Okay.
It's been a long while. Okay, so there's our roadmap, and we want to get to the promised land. We want to be able to self-direct our retirement account, invest in what the heck we want. And I'll tell you this right now. I alluded to it at the beginning. The roadmap we just gave you is very straightforward. Your financial advisor is going to make it sound like you're trying to get a patent on plutonium. They're going to say you can't do it. You shouldn't do it. It's a bad move. It's going to cost you. And if you even listen to Steve Kramer on Mad Money, he's going to say, you're an idiot. Let us at Wall Street do it, because they are terrified of self-directing. They do not want you to do this. This has been the MO of Wall Street when it comes to self-directing for almost 40 years, people. So you're the driver of the family truckster. If you want to go to Wally World, you can do it. So this is it.
All right. Okay.
Is that fair warning?
Yeah. Okay. Let me get into some of the process here and how this works. Okay, let's start with what we talked about first. Old employer, 401k, 403b. Okay, those are probably the most common we see coming over that want to self-direct. You don't work there anymore. Okay. All right. Here's the first thing to know. This is called the direct rollover. That's the words. When you're looking for forms or process at your old employer, it's called a direct rollover. Now, this is unique in that you initiate the rollover at the prior 401k or 403b administrator. So wherever your prior employer plan was, let's say it's at Fidelity, you are going to initiate the rollover of those funds as what's called a direct rollover, meaning it's going from a 401k or 403b into an IRA, let's say a directed IRA. We will receive the funds, then you will submit a rollover contribution form or a rollover form saying, hey, I just had Fidelity send over 100 grand from my old employer 401k, deposit it into this account. And then we'll
hold it for it. See, all right. Now this is where I'm already derailed. Okay. Mm-hmm. Now, when I call my former employer to initiate this transfer,
you're going to call the administrator of the plan.
Yep. Hold it. Okay. I thought step 2 would be open the account at directed IRA where you want it to go, because aren't they going to ask for the account number?
Correct. I presumed you already had the account set up.
Oh, you presumed, did you? Okay, see, This is why I'm here, people. I've got your back, because you don't want to be a high maintenance client at directed IRA like me. So,
yes.
Step 2.
Yes.
Once you figure out what the freak
Obviously,
you've got,
roll over something here unless you had an account, but let's get the account set up. And that is an important point, okay? Because here's one thing we want to make sure we're doing. And this is why what Mark said, what freaking account do you have?
Yeah.
A lot of times we'll have clients that have an old employer 401k that is traditional dollars and it's Roth dollars. Mm-hmm. And they only open up, let's say, a traditional IRA here. Yeah. Well, then we've got to open up a Roth to receive the Roth dollars that are part of that old employer 401k. Now you could send it somewhere else. You don't have to send both sets of funds here, but that's important to do. And you do need those accounts set up so that then the rollover can happen seamlessly. Okay.
Now this is why, step 2, people, I've got your back. When you find out what you have, if I may recommend, before you call your employer, this is just for the 401k, 403b situation. We'll come to the IRA. Matt's really good at it because this is where I jack it up. You call directed IRA and you talk to the team and you go, here's what I've got, and tell them what you're trying to do. Say, I'm trying to bring this old 401k, and they're going to go, is it traditional or Roth? And you're going to go, help me out. And that's where you're in step 1. You're figuring out what you have. And if you go, oh yeah, I'm going to bring traditional and Roth money, they will email you immediately or walk you through online right there to get the account set up. So that part's done. So I would say step 2 is, if you're going to throw a football, you got to have your receiver in mind. So you want to make sure you've got that destination already figured out. And directed IRA will help you do that. Now, maybe in conjunction with this, you're doing a consult with one of the tax lawyers, doing some bigger planning. That's fine. But Matt, they can call directed IRA and they'll say, okay, this is what your goal is. Before you call the employer, let's get the account set up because they're going to want to know the account numbers.
Yeah. And I know some of you know what you're doing. You know what your 401k is. You know whether it's traditional or Roth. You're already ahead of the game. You're like, guys, I know. For those of you that don't, or if you're not certain, we want the statement. Okay. Yep. Send us the statement. It's like, if you're not familiar with all the retirement plan rules, because it's not your job every day, you may not understand the lingo that's on the statement to determine what the heck you actually have. We can help interpret that so you know which account to set up to then, as Mark said, be the receiver of the funds coming over.
Yep. And now, by the way, what I'm doing right now is I'm diagramming this out on a piece of paper. I'm going to have one of our graphic designers help us out in the law firm here. And if you could catch this podcast on YouTube, because we simulcast on Spotify, iTunes, Stitcher, and all the podcast platforms, but also on YouTube. So you can see the link for this to go to the YouTube version of this when you go to directedira.com/podcast. I'm going to have a little diagram that shows these steps. It's going to look really cool, kind of like a little bouncing ball.
All right.
So like some of us need that, Matt.
Okay.
Because we don't want to be called high maintenance.
I love that.
Sure. Yes. Okay. All right. Now, Step 2, I open my account of where things are going or identify which accounts it's going to. Then step 3 is this is the 401k track or 403b. I call the company? Do I call their HR? Who do I call? Do I call the statement, phone number on the statement?
The administrator. So let's say you a company you used to work at used Vanguard. You would call Vanguard and you would say, I want to do a direct rollover of my funds to an IRA. Now, if you have most people have traditional dollars in these accounts, and that's it. That's 9 out of 10, or maybe 8 out of 10. So you're typically going to go to you would have set up the traditional IRA in step 2. So you're going to tell, I want a direct rollover to roll the funds to a traditional IRA. They'll have a form for this. Now, some employers must approve that. Some plan administrators already have a list of, this is a former employee, they don't work anymore, let their money go wherever the heck they want. So there could be a different procedure, but you're going to start with the administration company for the plan, the Vanguard, the Fidelity, Nationwide, whoever it is that's doing your plan administration that you're getting your statements from.
Will the broker dealer initiate that company approval, or I may have a step 3 myself to go do it?
Generally, they're going to initiate it if it's required.
Okay. Now, what if it's a 403b, which is more of a government type plan? Is it going to be a broker dealer just like?
Same process.
Okay.
I mean, it could be a Fidelity or Vanguard or. Nope.
Okay. So I called them up, and then you already jumped to step 4. You said, then you're going to call Directed IRA back and say, all right, the money's on the way. I filled out my form. Step
3, you will call, but they're going to have a form typically, because you're going to need to fill out a form, but it's not our form. Okay. It's on the 401k or 403b. When moving from a 401k or 403b to a self-directed IRA, regardless of the account type, the form you're submitting to get money out of a 401k or 403b is that plan's form.
What's the name of that form?
A direct rollover.
Submit direct.
Sometimes they'll call it's a very generic form. It'll be like a withdrawal form or even a distribution form, but you're going to not do a distribution, of course. You're going to say in that form, send it to an IRA, check this box, it's not taxable.
Okay. So, and I'm not taking that direct rollover form and sending it to Directed IRA. I'm going to give it right back because they want it in writing. Because if I call them up and go move this money, they're going to go fill out the damn form. So I'm sending that form back to Vanguard in this example.
Yeah. And
that's called a direct.
Okay. Yeah. And you'll have the Directed IRA account info for the account you set up in step 2. So they know, send it over, and they're going to code it to us to go into this account.
Okay. But Directed IRA doesn't know you did this. So that's where you came to step 4 and you said, we're going to fill out a form at Directed IRA to let them know what's on the way.
Exactly. That's called so we have a rollover form on the fund your account section in the forms on our website. You just go to the homepage in forms, fund your account. And this is any place, they're going to have a form for this to say, hey, I had 100K or whatever the amount is come from Fidelity. It's being deposited into my IRA there.
Rollover form. And what I love at Directed IRA is when you get on the website at the main page, there's a pull down menu for forms and you go boom. And what is the category that this one would be in? This would be in funding an account. Fund your account. Because I think everybody, you're trying to fund your account. You're throwing that football. I want to have Directed IRA receive the money, receive the football, and they're going to be, you know what? People, if you're watching YouTube, you would have seen Matt roll his eyes. I don't need that.
I smiled. I love the receive.
I thought that was an eye rollover.
No, that was I was delighted. I mean, I was thinking, are we Jerry Rice? Like, who are we? If we're because we're like the best receiver at Direct.
Oh, I'm Steve Young. You're Rice.
Jerry Rice. Okay.
Jerry Rice. Yep.
Maybe Montana to Rice.
Yeah.
I mean, you can be Steve Young, but
I know some of you listeners are at the engineer Matt level. You guys are like, Kohler, shut up. I just want to hear Matt tell me what to do. But I would argue there's a lot of people on the show that are like, thank you, Mark, for thinking of us little people that are not as smart as Matt Sorensen. That's
okay. Because I got some technical rules in this next step.
What?
Yeah.
Holy hell. Okay. Step 4, rollover form, fill out at Directed IRA. I got to write this down, Directed IRA, and I'm going to submit it and let them know what money is on the way from where.
Yep.
Okay, it's on the way. All right, so now the money's on the way. By the way, how long does all this crap take from
Okay, direct rollovers are the longest. This is the biggest pain. These 401k administrators are slow. I would say it's about a week to 2 weeks. We're just over here waiting to receive. We're waiting for them to freaking throw the ball to us. Okay. Yeah. So don't call us and complain. Call them and put the pressure on them.
Hike the ball.
Yeah. And so if you think about this, these 401k administrators or 403b, whatever, maybe any employer plan, they lose money when they send your funds out. So it's not a high priority over there. You know what I mean? Mm-hmm. It's not like the first thing they're trying to get to during their day.
Hell no.
It's like end of the road. Don't worry about hustling it. Let's just take some time. Yep. So the transfers from IRA to IRA, which we'll get to here in a little bit, those go pretty quick. Okay. The old 401k or 403b take some time.
Okay, now I want to do a quick side note, if I may. Okay. Back in step 2, when you're opening your account, keep in mind, if you're going to do a crypto account, you're going to want to let directed IRA know that. And you may say, you have this latitude. Let's say you have 100 grand. Oh, this is good. So I'm going to be technical here because I can be technical. Okay. So let's say you had 100 grand at an old 401k and you go, I'm going to roll it over to directed IRA. So in step 2, you've identified what you have. Now let's say that old 401k was half Roth and half traditional. So you got 50K, 50K. So you call it directed IRA, you're talking to the team, they're awesome. And I was just there last week and they bought lunch. Matt did, and we're all together hanging out. Okay. You call them up and go, they're going to ask you, well, what do you want to do when you get here? And you're like, well, I'd like to do a little crypto trading. Okay. Did you want to do that in your Roth or your traditional? Oh, I'll do Roth, but I only want to do half of it in crypto IRA. Okay, cool. So we set up a crypto Roth account and you want to make a note. I'm going to send 25 grand to the crypto Roth account number. So you're going to want to write that down. Then you go, then I want to just do some basic trades. I just want to put it back in stock and just sit on it for a little bit. With the other Roth, yeah, that's the other Roth money. Okay, then that's a regular Roth account because you're going to want the trading option on it to just buy some stocks and sit back until you have something more creative. And then you go, oh, but with my traditional money, I got a real estate project I've been thinking about. And my spouse is going to come in, my kid's going to come in, and we're going to form an LLC and really take that 50 grand of the traditional money and do a cool LLC and go buy some real estate. Okay. They're going to set up a traditional IRA account, and then they're going to say, get your appointment with the law firm so you can get your LLC going so we can approve it and get the money moved and fund that LLC. Okay. Now think about that. You've got 3 accounts set up, 25, 25, 50. Each account's doing a different thing. That's the beauty of this, people. You're in control. You've just kicked out the driver of the freaking family truckster. You're going to the promised land, people, and you're in control. But that's 3 accounts. So when you go over to step 3 and you fill out a direct rollover form, ooh, Matt, I want to ask, would that require 3 different forms?
If you were going to do it that way, which thanks for making the complicated example that rarely happens, but yes, you would do 3 forms.
I thought you'd appreciate that. Talk about passive aggressive.
I'm like, people are probably like, geez, this sounds complicated. I thought it was simple.
Oh my gosh.
So yes.
I can't win, people. I can't win. Either it's too simple or too complex. Jeez.
Now, if you had traditional and Roth funds in your 401k, you would have had to do 2 anyways, because those are 2 separate accounts. Even at your 401k administrator, they have those tracked as 2 different accounts and pots of money anyways, which we have to do the same thing on the IRA side. But if you want to do crypto, in addition to doing regular self-directing or a brokerage account, the crypto IRAs are their own unique account. Okay. Those are linked to a Gemini trading account, so they're their own unique account separate from your other self-directed assets.
All right. Well, I'm at step 4. The money's there. I thought it was all over. You're saying there's something else I got to do?
No, but I was going to say, let me give another scenario too that's common. Okay. And that one, that happens, what you're talking about, but not the 3. The 2 happens where you do need to do 2 direct rollover forms for the traditional and Roth. But it could.
All right, you throw out an example. I'm all about teamwork here. If you want to throw out an example,
here's a common
I would welcome it.
Here's a common one we're doing now. Is someone has an old employer 401k. Like we're getting this one a lot for people that want to do crypto. They're like, man, I've got this $10,000 in this old employer 401k. It's never been enough to do much. I couldn't buy real estate or do any other self-directing, but I'd like to throw 10,000 into crypto, but I want it to be Roth. This is an old employer 401k that's traditional. How do I get that over? Because it's traditional now. I need to get it to Roth because I want to do crypto with Roth money. I want the tax-free thing if this thing goes.
Okay, fair enough.
So in that instance, you would do a rollover to a traditional IRA at Directed, a traditional crypto, and then it gets converted to Roth. Now we have an all-inclusive, it's almost like a great resort in the Bahamas. We have an all-inclusive Roth conversion app for people that just want to do this, where we have one application you set up at Directed that opens a traditional IRA to receive the rollover of traditional funds. It has a Roth conversion election in it that you say, convert this immediately once you get it and put it into a Roth IRA account for me. So that's a common one we're doing right now for a lot of people rolling over some of these smaller old employer 401ks that you're like, I just want to throw some of this into crypto. It's never been enough to worry about, but and it'd be cool to do some crypto money with it. And you don't have to go to Roth. You could just leave it as traditional. But just a little tip there on that process. We've tried to simplify that in an all-in-one package, but it's got to come over as traditional. Then you'll convert it to Roth.
Okay. Now, if you're watching this on YouTube, you're going to see the little box that says step 5, if you want Roth. And I put convert to Roth once you're at Directed IRA. But I would just add this. Bring this up when you're in step 2. Because you're going to get frustrated if you don't mention this in step 2. The team's going to go, oh, you're being Mark Kohler now. You're high maintenance.
Yeah.
Why didn't you tell us this back on step 2?
Directed IRA, or you've made a mistake and chosen some other company. I mean, it's the same thing.
I will say this, and this is totally being honest and transparent and not self-serving or commercially, if that's a word, is you start calling some of these custodians out there, you're lucky to get someone on the phone. And if you do, they're just going to tell you to go to the website and they don't know what they're doing. You can talk to someone at Directed IRA every day that knows what they're doing, that are going to help you get through this. And that's why we're number 1 in the customer satisfaction in the country right now. And we're just booming. So be patient too if we're a little busy. Okay, so step 5, you convert to Roth while you're there if you're going to do it. Now, step 6 would be start investing.
Yeah.
Right? Is that it?
Yeah.
Okay.
You're in the party.
6.
Yeah.
You're in the party. Woo!
Start mingling.
Start giving out your phone number. Woo! Start partying. Start investing. Okay. Now, that is the 401k, 403b track.
For old employer.
For old 401k.
We got a version, a separate version. I don't know what to call it here. Separate process and procedure for 401k plan or 403b where you still work.
Okay. And you said I was complicated. All right. So I'm still working.
Yeah, it's not an old 401k. I still work there. Okay. I might even still be contributing, Well, I want to get that money out to self-direct.
Okay. So track. All right. Okay. Now we've already gone through step 1. You've identified all the accounts. You've called up your administrator. You find out how much you have. So I'm going to call that the audit. Just make sure you've got what you have. And then step 2, I would say on the face of it, it's going to be rare you can access this. So what do you say step 2? You've got money at a current job. You know what it is. What are my options? What do I do?
Okay. This is where you want to determine this at step 2. Can I even use this money? Okay. We're determining what it is. Maybe let's say it's a traditional 401k. You still work there. It's all traditional dollars. Now, if you are over age 59 and a half, and for some plans it's 55, you can move the whole thing out if you want, even if you still work there. Once you're at retirement plan age under the plan, which for most is 59 and a half, and some plans do it at 55, you can move the whole dang thing out. And in that case, if you were a traditional 401k, it would go to you would open up a traditional IRA, do the direct rollover form, similar.
Oh, can we just do one step at a time?
It's the same steps as the last one.
Okay. But so did you say 55 and over or 59 and a half and over?
Depends on your plan.
Ooh,
For everyone, it's at least 59 and a half. Some plans let you do it earlier at 55.
Okay, some. All right. See, that's a nice important detail I wanted to clarify. Okay. So if some plans, and now when I call them, should I trust them or should I try to read the dumb plan?
Yeah. Now here's the thing in this situation. There's so much confusion on this, and the frontline person you call at the 401k administrative place is going to be like, you can't do it, because they don't know. They just don't know.
And the easy answer is to say no.
Yeah. And so when in doubt, say no. So it might take a little bit of prodding to say, I'm already at retirement plan age. Those would be the words you would say. Now, if you're, let's say 57 and you're like, I don't know, I'm not 59 and a half. I need to know if my plan does it at 57. Ask for your plan's summary plan description and adoption agreement. This is something you should be entitled to get. It's probably in your account when you log on, or your employer can provide it, or really the plan administrator. Ask for that if you're not feeling like you're getting the right information, because that'll say what retirement plan age is under the plan.
Okay. Now, I had a good question here. So I ask for this document, summary plan and description document. If I'm confused, can I say, thank you, and take that and send it over to Directed IRA? Or should I go to the law firm for a consult at that point?
Yeah. What I would say is get elevated help at where you're at. So if you're at Vanguard, let's say, and the person you're talking to is like, I don't think you can do that. You're like, no, I'm retirement plan age. I can roll out whatever the heck I want. They should know that you can. I would overcome their objections and try to get to their supervisor. You might have to be a Karen, or, sorry for the Karens out there, but the millennials know what I'm talking about. You might have to ask for the manager. Okay. And get the help that you need by someone that actually knows what the heck they're doing there. Because at the end of the day, it's someone there that's going to have to push the button to let the money go out. Now,
so don't be a total jerk.
Yeah, don't be a total jerk, but just make sure you're getting the right answer. And if you're like, guys, I'm 60 and they're refusing to send my money out, then give us a call and we'll look into it. But I want you to exhaust your own options first, because frankly, we're not authorized to go talk on your account anyways at your old 401k administrator. So I can't call over there and be like, hey, Sally Jones, move her dang money. She's 60. They're not going to talk to us.
Okay. Now, there's a fine line, everybody, between being assertive and a jerk. I don't know. I'm all over that continuum. Some days I'm assertive. Some days I'm a jerk. Okay. Just a side note. I don't know. Little personal therapy session.
Is that a moment of self-reflection?
That's moment of self-reflection, folks. Everybody's like, what in the hell is he talking about? Okay. Now, you're saying I can take out all my contributions and matches, or is it just my contributions?
The whole kit and caboodle.
Do I have to have vested?
Yes, you have to be vested.
What's vesting mean? Tell everybody what vesting means.
So some of your 401k money or employer plan, the company's matching or putting in money for you. And the company's money vests over time, meaning it's in the plan and it's invested, but you don't have access to it if you leave immediately. So let's say it's a 3-year vesting schedule. The money you put in 2018 is now fully vested because we're in 2021. But if you were to have left in 2019, that money that went in 2018 that the company put in would not be vested, so you would lose that.
I would say this too. Another way of thinking of this, it's not investing. It's vesting, meaning the company's putting handcuffs on you. They're saying, if you join our company, we're going to match at this percent, but you got to stay at least 3 years. You can't take it out with you until you've been here for so long.
Okay, and a lot of vesting has kind of gone by the wayside because the most popular 401k plans are now safe harbors, and those have automatic 100% vesting when the company puts the money in. So vesting is still a thing for sure, and you want to check that, but many of you may not, the company may be putting in money, but it's 100% vested when it goes in anyways.
Okay.
That's a good consideration.
Now, this would also be on the summary plan and description document.
Yep, exactly.
Okay. I've been listening. I'm taking notes. Okay.
Yeah.
Now, I've heard you have to call your company or the HR department. You're saying just call Vanguard or Fidelity. I'm confused. Let's say it's a small business. I'm not calling my AT&T or Microsoft. I don't know who.
Well,
Any direction there for people?
You're still going to call whoever does the plan administration, and that manages the plan, who you're getting your statements from. Start there. The employer may have to approve something. In many small business 401k plans, the employer or the HR department actually has to approve money leaving in particular, or a distribution, or maybe you're doing a 401k loan. The employer has to approve that.
And I would say I like what Matt said about exhausting your options, because they're not going to talk to us at the law firm, accounting firm, or directed IRA, because we're not you. So if you just call HR and go, I'm confused, I just want an answer here, who am I supposed to call? They should point you in the right direction. Yeah. Okay, so I'm at step 2, and I find out, and I'm going to say step 2, if you're over age 55 or older, you got to start asking. Let's say I'm going to jump to step 3 and say I'm under age 55. What are my options there?
Okay. Now, this can maybe scenario 3, not, maybe, or I don't even call it step 3, but
I'll work it out. I'm the visual guy.
Okay.
You're,
all right.
You're just the brainy guy.
You're doing the Pictionary. Why we go?
Yeah, Pictionary.
So, okay, you still have options. That's the cool news. A lot of people stop here and are like, I can't self-direct. I can't self-direct anything because I still work there and I'm not 59 and a half yet. And so I can't self-direct. Well, let's say you're 40. You still work there. What can I self-direct? The employer dollars that have been put in the plan that are vested can always be rolled out.
Really?
Those are
no matter what kind of plan? That's like federal law?
What kind of plan. Now, the company may restrict it, but the retirement plan rules always allow those dollars to be rolled out, even when you work there and are not 59 and a half yet. Now, it's a little weird because a lot of people think, well, that makes no sense, Matt. I can roll out the money the company put in for me, the employer put in, but I can't roll out the money I put in as an employee. Yeah, that's the rule. I don't know why it was done that way. It's kind of dumb. But the money that the employer puts in, maybe the match, let's call it, as long as that the money that part of it that's vested can be rolled out, and that's usually traditional dollars, so it get rolled to a traditional IRA. Now there's a catch to that. Okay, that's the general guideline.
Okay, before you do the catch, let me ask this. You said you can always do that, and then you said unless the employer restricts it. That didn't.
Well, that's the catch.
Is that the catch?
That's the catch.
Okay, all right. Explain that.
So legally, and in the retirement plan rules, vested employer dollars can be rolled out whenever the heck you want. Whether you're 40, 59 and a half, 70, doesn't matter. You can roll out the money to an IRA of your choosing.
Okay.
The company is allowed to restrict that, though. Now, most companies, surprisingly, do not. I saw a survey that said 2/3 of company plans allow you to roll out. This is called an in-service rollover, or sometimes called an in-service withdrawal. Most 401k plans, like I said, allow for this. Now, this bucket of money is usually a smaller piece, because if you're throwing in, you're maxing out the employee part, and the company's doing a little match, this match and company part may not be the largest piece of your 401k, but it's something you might have to work with.
Okay, let me say, now that's what I was going to ask. Is this called an in-service rollover? Is that what it's called as well? If I'm 55 and older, it's the same term, or is it a different term when I'm 55 and older?
Same term, yeah. Okay. Same term when you're 55 or 59 and a half, depending on your plan rule.
All right. Now, the only other way to access it, if I'm currently working, is to quit or get fired.
Yeah.
Where I am. Okay.
Now, sometimes, and I had a client recently have this, is if the company changes their administrator or changes their plan rules, you're allowed to roll out. So sometimes if the company makes a plan change, you're able to roll out. And I had a client strike while the iron was hot on it. There's a window there of when you could do it.
Well, and also I would think that would be as if the company is acquired or there's a reorg or something like that. And at that point, you'd be able to roll out everything. Right?
Yeah, if they were acquired, probably not. If another company just bought their stock, probably not. Now, if they change the plan because of that, because they're like, well, we're going to move everyone over to the plan of the big company now, maybe. But
okay, plan is amended. What if I'm a part of a small business company and I go into the owner, like I literally know the owner, which is a lot of small business owners, let's say, and I go, hey, we got this safe harbor plan. I really want to self-direct. Can they do anything? Can the employer that's literally in control of the plan do anything? Or do you have to ask them to say, go check out Market Matt's podcast. Go adopt a different 401k because your 401k sucks. I can't self-direct.
Well, I mean, it's possible to have a self-directed 401k plan where the small business owner can self-direct. Any employee working at the small business can self-direct. Our law firm's 401k, we can self-direct it. I self-direct it. It's super freaking complicated. Okay. So you small business owners that are out there like, I want to self-direct. I've been waiting to hear this. I've got a 401k or I want to set one up, but I've got 10 employees. I can't do a solo K, but I want to use my existing 401k. Different topic in this show. It's possible, super freaking complicated. Probably not worth it unless you're very, very committed.
Okay.
Even Whitney, for me, it's hard to do.
Yeah, I'm going to tell our studio assistant, or Whitney, can you put down a show topic? Group self-directed 401k or group 401k that can be self-directed. And I'm not saying that's topics coming out next week or the week after, because we're trying to find the best company to send those clients to. We don't set those up here at Directed IRA or at KQS Lawyer. So don't call up and go, oh, I want this group 401k that's self-directed. We hope to be able to give you direction or where to go.
We've done it is the problem, but they're very complicated and hard. And my experience is it's so much work that the typical small business owner gets overwhelmed with it. Yeah. So it's not like an easy solo care IRA. But back to the transfer rollover rules. Again, if you have a 401k, small business, big business, you've got the Dunder Mifflin 401k, whatever. The employer contribution, it's possible to roll those out if they're vested in what's called an in-service rollover. Now, this is the one where you really have to be the squeaky wheel, because the typical person at this 401k administrator knows the general rules, but they don't know the loopholes. So they're going to tell you no. Oh, you still work there? Yeah, you can't roll it out. They don't know the little loophole. It's like, no, I just want to do an in-service rollover of the employer money that's 100% vested. You got to kind of keep pushing, and you might have to ask for the manager, supervisor, so to speak.
I would say this too.
To get the right answer.
I would throw this out for everybody as well. In our track number 1, when you have an old 401k, there's no real question to call up and ask, can I do this? Because it's an old 401k, it's yours. So don't feel like you have to ask permission. In this track number 2, where you're currently employed, there's this permission kind of, can I do it piece or step. I would not call Directed IRA and open an account in anticipation of this happening. Do your homework first. Right. Go to the employer, call the broker dealer. I'm calling this step 2A or 2B, depending on your age, but you're going to call and figure out what you have. Once they go, yep, you can do an in-service rollover. Here's how much you're going to be able to do approximately. We'll get that to you later, but at least you know you can do it. Then you go to setting up the account. So you've got that receiver. You send out Jerry Rice on his pattern. All right, dude, you're going to do what's a pattern? I don't know.
I don't know.
It's a good one.
What do they call it? Like a fly route, a go route, the skinny post?
Post route. I've heard of the post route before. Obviously, all of you are like, what are you, an idiot? Yeah. Pretty much. I just watched it on TV. Okay, so you're going to say, do a post, go. And so you're going to send your receiver out there to get the ball. So I would figure out if you can even throw the ball first. All right, now, track number 3. which we ate the frog. We did the hard ones first.
Yeah.
Track number 3, I got an IRA, not a 401k. I just have a freaking IRA sitting somewhere. It could be at Acorns. It could be a TD Ameritrade. It could be an app. It could have $1 million in it. It could have $10,000 in it. It's just somewhere sitting there.
Yep.
It could be at a bank.
Yep.
Okay.
Yep. Now, this is an easier process, like Mark said, but it follows the same procedure here. A little different form and process, but we want to identify, what do you have? Is that a traditional IRA? If it's a traditional IRA, you're going to set up a traditional self-directed IRA, a directed IRA. If you want to do crypto, a crypto traditional IRA. Okay, so you're going to match up the account type with the funds where the existing account's coming from.
Okay, so step 1 and 2 are the same.
Yeah, yes. And the nice thing about IRAs, or Roth IRAs, or SEP IRA, or even HSA and ESA, you're moving this, those can always be moved. You can always change. You could go from Morgan Stanley to Merrill Lynch with that account, Merrill Lynch to Charles Schwab to directed IRA. Those, you can always change the custodian as many times as you want. And it's called trustee to trustee. You never touch the money in the middle. It's going from one IRA provider to another.
Okay, hold it. All right. First, is this called a transfer or rollover? I never know which version is called a transfer.
The transfer.
Okay, so the 401k stuff that we did, track 1 and 2, is called a rollover.
It's called a direct rollover.
Direct
it's not a rollover, because a rollover is a different thing. It's called a direct rollover.
Oh my hell. Okay, direct rollover.
I don't know, your congressman. You know, I don't know.
Okay.
Write the IRS.
Track 1 and track 2 were called direct rollovers. Now this is called a transfer, a trustee to trustee transfer. Okay, trustee to trustee transfer. Now
was step 3 or 4 when you request the money? Because this is where it gets very different.
I'm not to step 3 yet.
Okay.
I'm still writing, and I need to ask this.
Okay.
I thought there's a 60-day rollover thing. Like if they don't want to do a trustee to trustee, they're going to send me a check.
Yeah.
That's a whole other track, right?
That's a whole other track. Don't do that one. We don't like it. Clients mess it up. You get 1099. You have to do a bunch of stuff on your tax return. It's possible. Don't do it unless.
We're not even going to talk about it today.
We can hit it. I mean, but just you can do one 60-day rollover per every 12 months with your retirement accounts, but I do not recommend it. The 60-day rollover is, what happens is you have 60 days to redeposit that money into an IRA. So they're going to send you the money personally, and they're going to 1099 you like it's going to be taxable, like you're going to have a 10% early withdrawal penalty. But you have 60 days to redeposit it, and then you're going to claim on your 1040, so long as you did get it in within 60 days, that I redeposited it. It's not taxable. Don't assess me the penalty.
Okay. I'm just going to put on the diagram for those that are on. Whitney, thanks for getting the background going here. I'm going to call it step 3A, is you ask kindly for a direct trustee to trustee transfer, and they screw it up. You're not going to ask them to send you money. You don't want a 60-day rollover because you only get to do this once a year, and you don't want to use your get out of jail free card on this transaction.
Here's the big step, and this is what's different in the trustee to trustee transfer.
Okay, step 3B. This is what you really want to do. Okay,
yes,
I'm listening.
What you want to do, it'll solve all your problems.
Okay.
Call us at Directed IRA or where you're moving the money to, because we are going to submit the transfer form for you. This is a different procedure. You don't go, let's say your money's at Charles Schwab, okay? Your IRA is already there. You've been buying stock, and you're like, I want to send all of it or a portion of it over to self-direct. You set up your account with Directed IRA, the account you want. You would have already made sure it's the same account you have over at Schwab. And then you will complete a transfer form with us. You usually have to attach your existing statement.
What's the name of that form? It's a transfer to transfer form.
Trustee. It's called a transfer.
Trustee to trustee.
That's good. Yeah, the form is called transfer request.
Okay.
And we have cash only. Let's say you're moving cash over, or if you're coming from an existing self-directed IRA provider and you need to move an asset, you can do in-kind assets and cash flow.
And so we'll submit it to wherever your IRA is. We're going to do the heavy lifting. We're going to send the form to them and say, the client authorized this. You're going to have to sign it, people, because you're authorizing us to do it. But then we're going to send it over there and
sign off on it too. We have to do what's called a letter of acceptance with it. So we have to sign off on it too. Now we're a financial institution, so we're legit. They're going to send us the money, right? Nobody can do this. Like you have to be an actual custodian for IRAs. Yeah. So, and we're doing, 30 to 40 of these a day. Like we're doing transfers of funds in. So this is the most common way to do it. We have a whole transfers team that does it. It's called the transfer request form. Work with us. We will actually then send it off to Schwab or Acorns or wherever it is your current IRA is at.
Okay. Now,
let me say, if you fill out the transfer form and you submit it to, let's say, Schwab, it's going to get rejected. It's got to come from us because we have to send what's called a letter of acceptance.
All right. I'm also going to throw this out to you folks that step 2 is calling directed IRA to open the account where it's going to go. So we're back to the first track. You're setting up your receiver to receive the money. So you're throwing them the ball. You've got the account numbers. On that same call, you would say, okay, now that we have the account set up, will you help me with this transfer request?
That's in the process. You're going to get a follow-up email from us with the transfer form. We're asking you that information on the front end, setting up your account. So stick with us. We're gonna initiate the things and request the things we need to get the money over.
Okay, and I'm gonna say this too, because this was Mark Kohler's problem that Matt was joking about earlier on, is I got a little anxious. I wanted the Roth IRA to do the conversion thing because I needed to do the backdoor Roth IRA process. And I didn't involve the team members at Directed IRA earlier enough. And so I put the money in the wrong account because I was actually trying to be low maintenance by just doing it. And I actually made myself high maintenance. And so if you're going to, again, this is step 5 in our first track, is if you're going to do the Roth conversion backdoor thing, let Directed IRA know that's the long-term plan here, but that would happen once the money's there at Directed IRA. So remember, don't try to get anxious and do it too early. Do the Roth conversion once the money's here.
Yep. Okay. Yep. And in the Roth conversion, like the backdoor Roth's different because that's new contributions. But let's say you're doing a Roth conversion where you've got a traditional IRA already out there. We're going to convert those dollars into your traditional account or receive them in a traditional account, convert them over, drop them into your Roth. You actually have 2 accounts with us. You have to do that. But we have an all-inclusive one account app package to pull it off for you. And then we'll help get the transfer in, and it's going to come into your traditional to make sure.
Then the money's there. And step 5, I'm off to the races. Yeah. I'm investing. We actually save a step.
Now, let me say on the transfers, whereas the direct rollover from a 401k, whether it's an old employer or somewhere you worked at, those ones do take a week or 2 to get here. And it's just us. Like I said, we're just waiting for them to freaking throw us the ball and receive it. The transfers, though, usually happen within 3 to 5 business days. So if you're at TD Ameritrade, now there are some places, and I will say Acorns is one that takes a long time.
Yeah.
Also LPL Financial, there's a few places out there that seem to take a couple weeks. To just know that if you have a financial advisor, it usually takes a long time because they have to approve it, and there's an extra step there. Or if you're using kind of an online or a fintech company right now, they may have cool apps and stuff, but their actual back end processing of things is a little antiquated. So you might have a little delay on those.
Yeah. And there's so many details to get in here, so I'm going to hold off on convoluting this. But I have a side note. This was a question I literally got yesterday. This was a client that was holding Bitcoin. And they said, oh, I want to fund my Roth IRA. And I said, well, if you already have Bitcoin in your personal name, we can get that into your Roth. And he goes, oh, so I can just move the Bitcoin wallet to wallet? I go, no. So here's my point that I think is good for everybody to know. If you're going to self-direct, whatever your IRA is invested in now is going to have to be liquidated. because you got to get down to cash.
Yeah.
So
Good
that could
point.
be a step in here, right? You're going to say, liquidate all my crap. It could even be cryptocurrency, liquidate it, and then I'm going to transfer it over in the form of cash.
Exactly. Yep. Good point. So you will have to, log into your account or whatever, sell everything down to cash before the transfer request or the direct rollover request happens, because you want them to send over cash to your self-directed IRA or your crypto IRA at direct, or whatever account it may be.
Yeah. Now, some people go, oh, I'm going to be taxed on it. No. If you're in an IRA or a 401k, when you liquidate, you're not going to pay tax. You're just moving it to cash. And if you love that stuff, when you get back over to directed IRA, you can get the brokerage option and say, I want to buy some of that back at the same price I sold it for yesterday. All right. Yeah. So you can reposition yourself on some of the items that you want. You want to keep Lululemon? Get over here and self-direct the rest. And
and here's another thing is, with IRAs, you can always do partial transfers. If you're like, nah, I got $500,000 over here, but I want to buy a rental for 500,000, or I want to send 20 grand to do crypto. You can just peel off a piece of it. You don't have to transfer the whole thing. You can still have your IRA at TD Ameritrade or wherever you're at, and you can have your self-directed IRA over at directed IRA, or your crypto IRA at directed IRA. Now, the old employer 401ks are the ones that are a little clunky, though. Sometimes in an old employer 401k, it's an all or nothing thing. They're like, you have to roll out the whole thing, or you have to leave it all here. We're not letting you send out a piece of it.
But you know what? That's good anyway.
Right.
Get rid of that thing.
And you can send it all over here. If you want to move some of it to a TD Ameritrade account or something else, or a Fidelity, you want a brokerage account different from what we have, cool. We can do a trustee to trustee transfer over to that IRA.
On day 3.
Yeah, and get them out over here. You want to self-direct. So that, a little side note on that, that was that can sometimes cause confusion with people. So you can just get the whole thing out. We can move it around from here if you want to send it to other places.
And let me bring closure to my comment just a moment ago, if I may. And I'm sorry I opened that Pandora's box, because the client yesterday did not have the Bitcoin already in an IRA. They just held it personally. But since I brought it up, let me just highlight this. He would liquidate the Bitcoin he had to cash in his personal name, and then do a contribution of that cash up to the dollar amount that he could contribute right now for 2020 and for 2021. He was a young guy, so that's $6 grand for last year, $6 grand for this year. And he had less than 12,000 in Bitcoin as of Bitcoin's value yesterday. So he said, if you want to get this in your Roth, rip off the Band-Aid, convert to cash. Now, he's going to have a capital gain personally, because once you convert to cash with Bitcoin, you got to pay the tax on any appreciation. And then, but I said, rip the Band-Aid off, pay some tax on appreciation. You're in a lower income bracket right now. And if you're expecting Bitcoin to do what some people think it's going to do, this is, again, the time to get it in the Roth and never pay tax again. He was like, oh my gosh. So he would open a crypto Roth IRA to receive that cash. Some people with rental property go, well, I want my rental property in my IRA. No, you're going to have to sell the rental property and go buy a new rental property in your IRA. You can't just take a hard asset and contribute it to a Roth IRA or a traditional IRA. You've got to get it down to cash to do that. Are those fair points, Matt? I just wanted to, some people may have gone, ooh.
Yeah.
Mark brought up this other track, but that's
good. I think that's called closing the loop. I think you closed the loop on that one.
Close the loop. Well, thank you. That's your first compliment you gave me today. That meant a lot. It's been really painful.
I got a lot more. Don't you worry. Okay. I don't want you to get a big head.
That's true. Matt doesn't want me to get a big head, Whitney. That's what he's doing. He's doing me a favor. I
dole them out in dose,
Don't do me any other favors, Matt. I appreciate your worry about me, but
okay, let's hit just a couple. Let me make a couple other notes.
There's more?
Yeah. If it was an HSA, it's the same thing. Trustee to trustee transfer. ESA, trustee to trustee transfer. Okay. Inherited IRA, trustee to trustee transfer. Okay. So whatever your account you already have, we just want to do a trustee to trustee transfer. All you're doing is you're changing who's the custodian. Again, you're going from Morgan Stanley to Merrill Lynch, Charles Schwab to, E-Trade, whatever. It's the same You're just changing the provider of that. Now, again, like Mark noted, we'll want to get to cash first. So you want to sell into cash, and then the cash will get transferred over to your account of similar type at directed IRA, whether it's a self-directed HSA or crypto HSA or a self-directed SEP IRA or crypto SEP IRA direct.
Okay, jeez. Okay.
That's the
making notes.
That's the skinny on it.
I created a track 4 that those of you on YouTube are able to see, because track 4 is not going to have the Roth conversion option. Because if you're doing a trustee to trustee transfer with an HSA or a Coverdell, the educational IRA, there's not this option to convert it to Roth. Yeah. You're just going to go straight into that new type of account. So that'll even be a faster protocol.
Yep.
But I'm going to insert in there up between step 2 and 3, a liquidation point. That if you're going to do this, oftentimes you're going to have to give a sell order to someone to just say, sell everything, put it in cash, which would be a tax neutral process. Woo. Okay. Well, I think we've got it. So as John Candy would say, maybe say in vacation, sorry, folks, park's closed. Sorry, folks, park's closed.
Yeah.
Yep, the podcast is now closed. We're done. We got you to Wally World. You're there, but guess what? The park is open.
Yeah.
There for you to play. Have a good old time.
Yeah. I'll just give my favorite John Candy quote, but he's actually not the one saying it. He's on the end person receiving this.
Okay. Oh, may I guess the movie?
Okay. All right. You got to guess the movie. Okay.
Thinking Great Outdoors.
Dan Aykroyd. I'll give you.
Oh, you're giving me a hint? Oh, this is Great Outdoors.
Oh, it is Great Outdoors.
I knew it right there. See, you gave it away. I was going to say either Planes, Trains, and Automobiles.
Okay.
Great Outdoors. Or what was the one where he babysat for? It was Cully McCulkin's.
Oh yeah. It was like, movie. Don't tell mom the babysitter's dead or something like that. Or no, it was Uncle Buck.
Uncle Buck.
Uncle Buck.
I loved Uncle Buck. When he's giving that teenage girl a hard time. Oh man, those are some sweet lines. Cully McCulkin's first main role.
Okay, so the line though.
Okay, Great Outdoors.
Great Outdoors. Okay, Dan Aykroyd, who's the cool, slick uncle.
Yeah.
It's saying to John Candy's kids, do you want to go on a pontoon boat with your dad, or do you want to go on Suck My Wake with Uncle Roman? My wake, the kids. Suck my wake. Sorry.
You know what's funny? I'm not kidding. Last night, my wife and I were flipping around like Encore and Showtime and all, just trying to find something to watch last night. Yeah. And we ended up with What About Bob, which is classic. Yeah. So good. But Great Outdoors was on. And it was the water skiing scene.
Oh, yeah.
Where they said they get on the speedboat with Dan Aykroyd and John Candy is behind him and so that's so weird that you would quote that. Yeah. Because that's what I saw that last night. It was just on for about 30 seconds. I was like, John Candy, miss that guy. He's so good.
There you go. Well,
shout out. Okay, well, everybody, take us out, Mr. Sorensen, the brain of the show.
Thanks for hanging in there. A little tip here, a little plug, I should say, not a tip. The Self-Directed IRA Summit. If you're still listening, you like self-directed stuff, you should come to the Self-Directed IRA Summit.
Yes.
Go to sdirasummit.com. It's April 23rd and 24th. 2 full days. Mark and I.
Next week.
Whew.
Yeah. Matt Sorensen is coming up to Idaho.
Yeah, baby.
And dude, I could literally show you. Whitney, verify there is snow on the ground. It snowed this morning. It did. Is Targhee still open?
I don't think so.
Can you Google
Grand
that?
Targhee?
Okay, for those that don't know, Grand Targhee is one of the best kept secrets for skiers in the country. A lot of people feel that way. It's over the hill from Jackson Hole, half the price. Great. We're going to find out. Whitney's looking right now. Grand Targhee. Dude, if they're open, you should come a day early and ski.
Yeah.
This could be
perhaps.
Yeah.
It closes what day?
It closes the 11th.
Of April?
Mm-hmm.
It closed the 11th.
Oh.
Last weekend. Last weekend was closing day.
Well, anyways, sdirasummit.com, everyone.
Yep.
It's only $199. You'll get the materials. It's recorded. You can watch it over and over again.
You went cheap. $199?
I know. I'm just, I want to make it accessible for everyone.
I thought it was more than that. Oh,
I know.
that's a good deal. Okay, $199. Matt'll be here in the studio. We're gonna change the background from Main Street America to I don't know. And I will give you guys all a little, it's not a spoiler alert, a little teaser. I'm going to have a livestock purchase in my HSA before the summit. It's a homage, did you say that? To Yellowstone and Kevin Costner. I wish I could get Kevin Costner to come on.
Me too.
Yeah, Whitney's like, yeah, he looks so good. I don't know. He looks 10 years younger in Yellowstone. I mean, he just looks great. But in the summit, I'm going to bring my cowboy hat.
Okay.
And we're going to talk about livestock in an HSA, which people are like, what? You can buy cows in an HSA? And everybody goes, you can only use the money for healthcare. I'm like, oh my gosh, you're investing your HSA before you pull it out for healthcare. Oh, drives me nuts. So people, that is the inside track to the summit.
Yeah.
Some Kevin Costner, Mark Kohler, the Dutton Kohler Ranch.
I haven't seen
a heart with Casey.
Yeah,
I gotta
come
get
on,
Casey's good looking, right?
Rip is hot.
Rip. Oh yeah, he's a stud.
Yep.
So you're gonna have to watch at least the first 3 or 4 episodes.
Okay. All right. I will.
Yeah.
I will see what I can do.
I can maybe line up some horseback riding while you're here.
I mean, I think we're gonna be working. Unfortunately. I mean,
gosh, Buzzkill Sorensen.
I know.
Jeez, Karen. Is that from Saturday Night Live?
Okay. Everyone.
I'm not going to let Matt off. I'm having too much fun today. Everybody's like, finish the damn show. All right. Okay, everybody. We'll see you next week.
Till then.
Till then.